What is going on, Alpha Hunters? Hope everybody's having a very wonderful Hump Day Wednesday today. All right, nice gap up today. We did have a pretty good little sell down there last hour or so, a little bit over an hour 10 minutes. Nice little sell down there in the afternoon yesterday, and that man, that was really kind of concerning. As well, didn't really want to see an upper wick on the daily, and we kind of got a pretty good one. And the question is do you want to probably be getting out Wednesday morning? And I would say, yeah, I think you want to start pulling it back. We got this nice gap up today. I mean, we gapped up pretty good. And really, we just kind of gapped up to yesterday's high. But we gapped up 1.2%, right? So, looking pretty good today. And we haven't really done too much intraday. Nice little run there, first 30 minutes. Pull back for, 30 minutes. Trying to bounce a little bit, but I think it'd be better to really start pulling back, and it makes more sense when we look at the daily picture here. Qs, same kind of deal. Kind of gapped right to yesterday's high. A little bit of a bounce there in the first 20 minutes. Pulled back. Okay. Yeah, that's how the Qs look. Very similar to the SPY. IWM is a little bit different, though. All right. IWM a little bit different. Nice gap up here. About a 1 2/3% gap up there. Pulled back pretty good over the past hour and a half. All right. DIA. And the other thing you kind of notice is so far everything has that last hour and 15 minute sell off yesterday, which is kind of concerning. Nice gap up 0.7% today on the DIA. Looking pretty good. Has made a run up to yesterday's high. Did break yesterday's high. So, yeah, looking pretty decent there. RSP intraday. Nice gap up here as well. Up 0.8% on the open. Yeah, pretty good. Nice little run there. Start the day. The interesting spot is going to be on the daily. So, yesterday, we continued to push up pretty good yesterday. And I was like, ooh, we got kind of high. And on the RSP, especially here over the past couple of days, on Monday we had that gap down, talking about, looking for the retest, as, we just had a couple of days down in a row that was pretty good selling. Then we just had that big gap down on Monday. So we've gotten the bounce here over the past 2 days. And really not even 2 days, but we are now at a level here on the RSP where we are basically right into this little pivot level back from July 15th. It's also where the 10 and 20 is. Other moving averages. We're not really like high flying it higher, right? We're not really high flying it higher. Nice little bounce there on the open, but it's yeah. I think we're also at the level of the high of yesterday where we saw we started selling down from there, obviously in the last hour yesterday. So, yeah, it's probably not a bad time to be pulling it back. It's if that was your mentality a couple days ago, looking for the bounce, I'm gonna readjust positions, I'm gonna pick up a hedge or two, whatever that is. I think you're starting to really look to do that. I'm not saying here over the next hour we're gonna roll over like 1.5%. I'm not saying that, but I think you're probably looking for some decent spots or decent ways to go ahead and start, hedging or reducing some risk right now. If we do wind up climbing up through all of these moving averages and really the Qs, right? The Qs, look at all the resistance the Qs still got to go through. They still got to go through. The Qs haven't even gotten to the 10 and the 100 daily moving averages. Right, we're just now kind of getting to this top that we put in back in Q1. We're a little bit above the high of the wick yesterday. So the Qs still have a long way to go to kind of get through all this resistance. So it's not a bad time to go and pull it back and say, hey, you know what? If you wind up getting through some of this stuff, maybe you get back in bullish, right? 10 points or so, 10, 15 points higher compared to, how much to the downside could be a potential risk. So what I'm saying is we've bounced pretty solidly here over the past since Monday's open, especially on the Qs. So I would say it's not a bad time to maybe look to kind of de-risk. And you see the SPY here. We hit right off of that 100 moving average yesterday with that upper wick, right into that 100 moving average, which was also the low on Friday. And that's kind of where we're sitting right now, a little bit above that high yesterday. Also, this little hump that we had back in May, but you also got the moving averages coming down. So we could definitely start to see, you know, the market maybe stall out here off the bounce that we've had here over the previous 3 days this week. And if we do start to stall out and roll over, I mean, you're gonna be wishing you got out here, not oh yeah we rolled over and now you're getting out down here. So it's always good to be a little bit more proactive. And if we do wind up trying to get through these moving averages, like we'll probably hit some resistance at the 10. We'll probably hit some resistance at the 20. So it'll be choppy trying to get through here. The other thing is, well, if we do wind up popping up and going bullish, like if this was a low, like if that was a low, I'd imagine we'd probably do something like this and scoot on up out of here. So if that winds up happening, and you're getting out maybe here or maybe where we are now, or maybe we make a run all the way up to these levels before we kind of maybe do this pullback, then that's fine. If you get out here, then you can see how it kind of sets up later on. And if we start to do this curl up, then you can get back in. Maybe you get it back in a little bit higher. But if this was legit just a retest and we wind up doing this, that's where not being proactive on the defense can really cost some value on the portfolio. So just understand what your options are. I get it. Some people have 401k money or people tied into 401k. So it's like, I have to be invested somewhere. And that's a tough one. 401ks are not the best. I always kind of advocate of rolling out of 401ks and into IRAs. There are a lot more flexibility, a lot better diversification options in IRAs, a lot better ways to hedge your portfolio. 401ks are not not a great way to go, man. They really kind of stink. Yeah, other than that. The other thing about 401ks, you can't hold cash. That's kind of the really bummer part about 401ks. You can't hold cash. Like you have to be vested. You have to be invested. So IRAs, you can actually sit in cash. Yeah, that's a whole nother topic, but high level. There you go. All right, rolling on. VIX continuing to pull back. Are we getting into... All right, so we're getting into this high that we had back in October. Almost a year ago. Man, hard to believe that was almost a year ago. That's crazy, right? I mean, think about that. So this sell-off that we had back in October, right? Or we came all the way down. This is a longer one. I mean, how long did this one last? I mean, this was like 3 months almost of pullbacks. And we wound up... how much did we wind up pulling back on this one? We wound up pulling back almost 11%. Almost 11%. Where are we now on the pullback? We have pulled back... Well, we pulled back about 10%. About 10%. Not quite on Monday's low. And that took 3 weeks. So, I mean, the one back in October, this took about 3 months from the end of July. You got August, September, and then you got all the way to the end of October. So it took about 3 months to do that. This one took 3 weeks. So that's why you are seeing the VIX to much higher levels. So it's starting to be interesting here on the VIX, where we have previous highs over the past year and a half or so. So, I mean, if we're gonna, wind up basing, it's gonna probably be in this area, maybe before we go higher. Anyways, we'll see how the VIX kind of goes, because the VIX did get really high to start out the week. DXY, the old Dixie, bouncing. throwing some upper wicks. Moving averages are going to start to come down. You're going to start getting people selling out on the bounce. So, okay. This is going to take a couple more days to kind of set up. Either that or you're looking to kind of play it a little bit more aggressively bearish. As these moving averages maybe come in and push it down. Gold, kind of just hanging out, man. Kind of hanging out. I'll be curious to see if it starts to set up like a little bit more of a pennant pattern here over the next few weeks. That'd be interesting. 10-year yield. Ooh, yields are bouncing back pretty solidly. I'm not throwing an upper wick like the Dixie, but we are coming into that 10 EMA coming down. We also did break down this very important 4% level. I mean, we went slicing right through that sucker. So, yeah, I mean, that's going to be a good tell on bonds. So bonds will most likely be down, but man, they're probably just retesting. And you're probably going to be looked to be bullish on bonds. So we'll take a look at that here in a second. You know what? 10 and 2 inversion. Got a little bit of a bounce today, but 2 years bouncing a little bit as well. I'm gonna really kind of zoom out here on bonds. Give me a sec. Zoom. Turn off log. There we go. So the 2-year got down to this cluster that we had back in early 2023. What about the 30? Yeah, the 30 looks so much better. Jeez. So long terms look definitely much better. I mean, they didn't even break this low from the beginning, or kind of the beginning of this year, the very end of December there. So the 30, you're not looking too bad. Okay. So the 10 and 2 inversion really kind of looking pretty good. Got that huge pop going all the way into Monday. Got uninverted very briefly, has pulled back, but now has bounced. Obviously, the moving average is kind of coming up, pushing it higher. Probably continues. I think it's going to get real interesting. Maybe next week, week after. All right, HYG. HYG has definitely bounced off that 200 moving average very, very well. People have been flowing back into risky assets. We know tech's been doing pretty good here the past couple of days since that Monday open. Yep, doing pretty good. LQD sitting right on top of that 10 EMA. Nice pullback from a very nice strong move. My boy Brent's probably going to come in here and be like, "See, I told you about them bond prices." The TLT. TLT made such a strong move. Like, had to be taking some profits on Monday. Had to be taking some profits here. But we got a pretty good pullback here. So that's going to be the question, right? Do you want to be bearish or bullish here at this moment in time? I'd say you're probably just leaning bullish, right? We've got the pretty good retest on what was a pretty good push higher last week. So I'd imagine, if you're a retest kind of investor, you're probably looking a little bit more for continuation higher off that retest. All right, take a look at sector rotation throughout so far today, I guess. Healthcare lower end of the day is basically flat on the day. Discretionary is underperforming. Materials, communication, staples all underperforming. Real estate's kind of in line with the market there. Outperformers, utilities, financials, industrials, energies, and tech. So yeah, tech has been leading, I believe, since the open on Monday. We'll check that here in just a second. Tech is underperforming intraday on the gap up. We are seeing money come out of tech on the gap up. So, okay, starting to see a little bit of weakness on the things that have led. Materials underperforming intraday, as well as communications and discretionaries. So the three biggest, the biggest weighting sectors, the big tech sectors, discretionary, communications, and tech, they are underperforming here today. Materials also down underperforming. In line with the market intraday is healthcare. Financials are outperforming. Energy is also outperforming. Industrials as well. Staples and utilities doing pretty good. And then real estate doing pretty well again. That's 2 days in a row that we've seen real estate doing pretty good on the fact that yields, well, the real estate's kind of in line with the market, but intraday they're doing pretty well. And that is very interesting because we are seeing longer term yields actually higher. So we don't typically see that. There we go. So Monday morning's open. Yeah, we can clearly see tech has just absolutely been getting bought up, but we are seeing that rotation, that weakness so far today in the first, roughly 2 hours of the trading day on Wednesday. But yeah, that's where the money's been flowing so far this week on that huge gap down on in tech world on Monday. As far as everything else is kind of either in line or underperforming. Healthcare hasn't been doing well. Utilities also not doing well, kind of the lower end there. Staples as well. Materials, real estate, communications, financials, energies, all a little bit underperforming, and then discretionaries, industrials kind of in line with the market. So I would say the big one. I mean, it's just really tech. I mean, they're the ones that have seen a lot of the inflows, and what's going to happen if we start to see the outflows again?